Your stock moved quite a bit last night on your first quarter results, where you noted that your customers are mostly back at normal or even pre-COVID levels of activity. Tell us what your results mean, essentially, for us getting back to normal.
Yeah, so yesterday we announced really strong Q1 results that exceeded even our expectations. Coming into the year, we knew we had momentum, and we talked about the fact that in the second half of last year, our revenues had grown 17% compared to the first half of the year. And so we talked about the fact that we were coming in with some really strong momentum, but the Q1 results were stronger than even we expected. We reported revenues of $1.085 billion, which were up 26% year over year. And we talked about the fact that going into the rest of the year, we were seeing really strong indicators. So our orders coming in the quarter were at record levels of $1.4 billion, so the highest order quarter we've ever had. And then one of the other early indicators is the purchasing of our sequencing instruments, which was up 120% year over year. And so we're walking into the rest of the year with a lot of tailwinds. And I think, a number of things are causing us then to say, look, we're going to raise our guide for the year. And at the beginning of the year, we said we expected revenue growth this year of 17 to 20%. And given the strength we're seeing in Q1, we've now raised the revenue guide for the year to be between 25 and 28% revenue growth this year compared to last year.
One of the things you're also doing a lot of is sequencing COVID-19 or SARS-CoV-2 samples to help us track all of these variants. And that seemed to add more than $50 million in revenue in the first quarter, either from the materials used to do that or people purchasing the machines to do that. Tell us about sort of the strength of that business, how long you see it being needed. I mean, is this the beginning of a new sort of front in viral surveillance that we will keep up because we see how important it is?
Yeah, a few things in Q1 contributed to the strength of the quarter. The biggest part of the beat was the strength in the core business. So I'll talk about some of the dynamics that are driving the strength in the core business. But as you point out, another thing that showed up in Q1 was the demand from customers that are doing COVID surveillance. So I'll talk about that a little bit as well. In terms of the core business, what's playing out is we're seeing our customers, both on the research side as well as on the clinical side, go back to work. And activities, as you pointed out, their activity is back to, and in some cases ahead of, where they were pre-pandemic. And what's driving that are a few things. First of all, patients are going back into the clinic. And so you're seeing expectant mothers do more non-invasive prenatal testing. You're seeing cancer patients go back in to find the right therapies for their cancer. And you're seeing genetic disease patients go back in to get diagnosed. Now, what's driving that demand is not just that people are going back from the pandemic, but over the last year, so in 2020, we did a lot of work with the insurance companies to increase access through expanded reimbursement. And so in 2020, we saw increases in reimbursement for non-invasive prenatal testing. We saw a very dramatic increase in reimbursement for genetic disease testing. And we also saw an increase in reimbursement in the U.S. for cancer testing for therapy selection. And so a lot of that is starting to play out in Q1, and because there's increased access, patients are able to get more testing that they need. The other thing that's playing out is in Q3 of last year, we introduced some technology into the market that lowered the cost of sequencing. And so now you're able to see customers that are able to access a $600 genome. And the reason we continue to lower the cost of sequencing is we believe as a business that by democratizing access to sequencing, but continuing to drive the cost of sequencing down, we'll expand the market. And that's been true for the last 15 years. When we first got into sequencing 15 years ago, the cost of doing a genome for a customer was $150,000 with our first sequencer. Now, fast forward 15 years later, and we offer it for $600. So over a 99% cost reduction that we've brought in. And now you see surveillance.
I hate to interrupt you, but we're going to run out of time, Francis, and I have to ask you about the Grail situation and FTC challenging you there, because Illumina has become so dominant in this space of genome sequencing and providing tools for it that you've now been targeted twice by the FTC, and you actually abandoned the Pacific Biosciences merger you'd planned to do a couple years ago. Now Grail is in the crosshairs. They think that you could raise prices on Grail's competitors because you control the entire market. How do you respond to the FTC's challenge?
We disagree with the FTC. If you look at our history, our business strategy has been to drive prices down and increase access to genomic testing to patients. This is a very important test. There are about 10 million people a year that die of cancer every year, 600,000 in the US alone. The GRAIL test is really a breakthrough test, and it'll be the first over time of many. But what the GRAIL test does is it identifies 50 types of cancers, 45 of which have no other screen, and can identify them across stages. And we know for a fact that if you identify cancers early, you have a higher chance of survival. By doing this acquisition, we can accelerate patient access to that test and also drive accelerated reimbursement. And so the underserved communities especially will be able to get access to the test more quickly. That'll save tens of thousands of lives a year, we believe. It'll also lower billions of dollars in healthcare costs from the healthcare system. And by increasing reimbursement, it's pro-competitive because it benefits everybody, not just GRAIL. And so those are the points we're looking forward to making.
Shepard Smith here. Thanks for watching CNBC on YouTube.